A lot of eyes are on China right now for a lot of different reasons. All of a sudden, it looks like the Ukraine war is sort of a lost cause at this point. I don't think there's many people that believe we can pull out of that. We even have mainstream press who've been cheering and championing the Ukraine situation are now starting to change their tune. And as that's looking to wind down, it looks like the neocons, the warmongers in the U.S. are now looking at China. I guess we got to go over China. And so, of course, there's all the stuff going on in the South China Sea, the Taiwan. We have China and Russia doing joint exercises together near Alaska. There's a lot going on. But at the time when we're thinking now, not we, certainly not you and I, the neocons, the warmongers, want to start looking at China as the next enemy, what have they done? They've gone into economic beneficial relationships with other nations. They've out-strategized the United States. That's a whole different topic for a whole other day. If you want me to break that down, let me know. Hit me up on social media. Let me know. But it looks like China might be actually breaking apart from the inside. So at a time when the U.S. seems to be wanting to, or some people in the U.S., I should say, want to point their attention to China and why we need to stop their rise. Attacks from Trump started with the global tariffs, the trade wars. Biden went on with the chip wars, and now potentially hot wars framing up. China could be imploding from the inside. We know there's lots of problems. For example, their demographics. That's the people, the age of the people specifically. And what we can see from their numbers that they report through the census is that they have way too many old people and not enough young people. And so this is just a game of math. In the next 25 years, about half of their population will be gone. Just timed out. And they don't have enough young people coming up. Part of the reason why is because they had a one-child policy for like 3 decades. And so what China really needs right now desperately is like 20 and 30-year-olds that can help pay for the old people. But they can't snap their fingers and get that. So that's a big problem. But they also have a big problem with their debt. As a matter of fact, China has been the darling story of the world, how fast they've risen, how fast they've moved people from the farms into the cities, the amount of economic growth they've been able to have year over year over year. But everybody knows it's because they're printing endless amounts of money in debt in order to do that. All the stories that we've seen over the years, and I've talked about, of them building entire ghost cities just so they can keep people busy working. I mean, if you bring millions and millions and millions, tens and hundreds of millions of people from the rice paddies into the cities, what are these people going to do? Well, we got to put them to work, and so they just build. Let's build bridges. Let's build roads. Let's build trains. And so we have bridges and roads that go to nowhere. We have cities that were built with no people. Then, well, we're out of work, so let's just tear the whole thing down and let's just rebuild it again. And so they've done things like this in order to keep things going and really manipulate what they show as growth. But it looks like that could all be starting to come back and really bite them in the rear end, if you catch my drift. We can see that their economy is now slipping into deflation, which, of course, everyone else is struggling with inflation right now. They're struggling with deflation, which, again, as I was saying, is pretty amazing because they've been the growth darling for the last few decades. We can see that we can already see this starting to happen in China at a time when we also know that they're really not reporting the whole truth to us. We can see that July's consumer price index showed prices falling about 0.5% year over year, with core inflation rising. Producer prices contracted about 4.5%. We have slowing consumer demand in China, combined with their property markets dropping rapidly. Then that's causing falling exports, and it's pushing manufacturers to cut prices to get rid of excess stock. So as they cut those prices, it's causing deflation. Now, China, they had locked their whole country down on kind of a pandemic 2.0, if you will. And a lot of economists, global economists, kept waiting for China to reopen and China to reopen and China to reopen. And the story was as soon as they reopened, all that global demand would come back for oil and for concrete and for all these commodities and goods. But that's just not the case. China is now finding themselves in a recessionary, in a deflationary recession, and it looks like it could be spiraling out of control. Now, we don't know for sure because, like I said, they don't want to give us all the real info. I mean, what government does. What government can we really trust with information today anyway, which we really can't. But what we can see is that their currency is getting very, very weak. So we can measure that against the dollar, and we can see how fast that's dropping. Now, part of that is because they need it to be weaker so they can try to sell more of their goods and services. So that's just back to kind of like Trump with the trade wars. So countries will manipulate their currencies in order to make their goods more attractive. If the Chinese goods are cheaper, hopefully more people buy them. When they become more expensive, less people buy them. And so they'll manipulate the currency to try to bring the value down, more people buy them. And so we can see this happening, and you have to figure that's most likely why that's happening. We can also see that they have reports of record level of youth unemployment, and then they stopped reporting on the metric. So China suspended the release of monthly data on unemployment, specifically among young people, after the figure hit consecutive record highs in just the last couple of months. So they're already going through a broad economic slump. Now they're getting massive amounts of joblessness, specifically among young people. From April to June, we saw the jobless rate for 16 to 24-year-olds reach 20.4%. 20.8% and 21.3% respectively. That's pretty high. The U.S. has record low unemployment, about 3.5%. China is over 21%. There's a record 11.5 million college graduates who are looking for a job. Now, let's see. So we had a one-child policy for a few decades. So in the one-child policy, everybody wanted to have a boy, not a girl. We need to have a boy so the boy can work and make money and take care of me when I get old. So we don't know exactly, but we know we've heard records of millions of girls literally being born and killed at the bedside because the parents didn't want them. They wanted the boy. So what we have is we have a lot of boys with no girls. That's the problem. Now we have a lot of boys without jobs, without girls. That's a problem. And that leads to massive societal unrest. Like I said, we have big problems in the real estate sector. The housing crisis is turning 3 this month. And there's basically three red lines, a 3-red-line policy. They look at the ratio of liabilities to assets, the ratio of net debt to operating cash flow, and the ratio of short-term debt to total liabilities. All good markers. And what we can see is that their real estate sector is falling below all 3 of those lines. It's looking really bad.